Hi, welcome to the live daily analysis with Elite Currency, looking at the euro dollar and pound USD on the 20th of February. First of all, pause this video to read the entire risk disclaimer and be aware of the risk involved when looking at the Forex market. Let's start with the cable pound dollar 4-hour chart. Friday, I was explaining that I was looking for a bounce at the blue line. Price was at the resistance line, and I said that could be a bouncing spot. Didn't like the short at that particular spot because of the triangle potential. Price did make it down though, did break that triangle and headed back to the support, which I liked for a long position here, for a long setup. And indeed, price neatly bouncing up that blue trend line, continuing within this triangle indicated by the blue and the orange line. So what now? Anyone in that trade would have had to survive the weekend or rejoin on Monday earlier today, and could have gotten this bounce is up pretty good. So if you're in that trade, I would aim for probably around 125. 125 is around psychological level. We have a resistance trend line, plus we have tops in here. So that's a spot where price could and probably should, in a way, pause and retrace a bit. So if we look at the hourly chart, by the way, before I do that, if you look at the bigger picture here, if price eventually does break above the orange trend line, this potential space is available up to 127 probably at the top. And if the top breaks, then even further up to 127.50 and then perhaps 129, which is the minus 272 target. So that's the bullish space available. All right. If price fails to break this orange trend line, and in fact later on breaks through support, through the support trend line, through these bottoms here, then I think there's a bearish breakup potential down to 122.50, 122.60, which is the 61.8 fib. You can see price already used the 50 fib indicated by the green circle. So that would be the next target and also the next bouncing spot for a bullish bounce there at the 61.8 fib. I myself am counting on a bullish break to retest that trend line and perhaps further. So that's what I'm expecting. But that bullish break, of course, is invalidated if price were to break through support. In that case, I would expect a bearish breakout. But until that happens, I am bullish, and I'm expecting a bullish break. So let's take a look at the hourly chart. Why am I bullish? Well, wave analysis, first of all, I think I see, well, I do see a 5-wave structure here. So I see a corrective choppy downside. So those are things that make me, also look at the bullish side. Also, good 5-wave up on the 4-hour chart. Just quickly going back here. So those are wave analysis that make me biased to the upside. But I also see basically 3-wave support here, 3-wave correction, back to support. And therefore, I think that this time it could finally break. I think that this correction is finished, and there's a good chance of that. And I think that price might stall here at the trend line, but eventually break. So what would that look like? On a 50-minute chart, or 5-minute chart even, what I think could happen is, because you can see the momentum already in the market at this moment, I think that there could be a break of this top, hit the trend line around 125. There would be divergence on the 5-minute chart. And I think that that could create a correction. It could create a 15-minute bull flag or hourly bull flag. So what I'm waiting for is actually a bull flag on the 15 or hourly chart. Once I see a bull flag, that means that the momentum is up and I see a sideways correction. When I see that bull flag, that means that the market is stalling and respecting the resistance, but not moving away from it. So when the bull flag then breaks to the upside, then I think that is a bullish breakout that is worth catching, because it could lead to that bigger move on the 4-hour chart. So that is exactly what I'm looking for, a respect for this resistance trend line by a chart pattern called the flag, the bull flag in this case. Now I think it's not a good moment, because price is too close to resistance, and the chance that price will respect that resistance is pretty high. So I don't want to go with a long right in front of resistance. I rather wait and see how the currency reacts. And if it reacts how I want it to do, I'm interested. If it, however, shows a strong close in reverse and momentum flies down like this, and I see a 3-wave pattern like that, then we could have another bounce, another bearish bounce back to the bottom. In fact, you never know. These things can play out long, like we had here, for instance, earlier. Could happen again, right? So any strong bearish momentum that takes price back down to 124.50, 124.40, would be a warning sign. I could put a fib from here to here. That's where I expect the fib roughly to stop, right? Maybe a bit higher, something like this. So anything up to the 38.2 fib could be a normal retracement, but anything below it is probably moving back down to the bottom of the triangle, just like it did here and just like it did here in two earlier cases. So that's my main focus. On the euro dollar, I'm looking at a potential bounce at these fibs. Price has already reached the 50 fib. We talked about the fact that price could bounce at the 23.6 fib on Friday. Check the other videos, that it could bounce up to resistance and get rejected there down to the 38 or 50 fib. So it neatly copied that analysis, and you can check it out live that it was explained beforehand. So that's happening, or has happened. The question is, in my view, has price stopped at the 50 fib for the bounce and the ABC zigzag? Or will the B part, the green B part, still extend, and will price go down to the 61 or the 78.6 fib or even the 88.6 fib? So that's the main question. So how will I answer that? Well, first of all, if it does get down here, I do think that those are potential bouncing spots. That's one. All right, if it gets down there, but it should not break below this bottom. If it breaks below that bottom, then I'm back in full bearish mode, and the downtrend probably will continue. This downtrend channel lasted long, showed good potential, so downtrend is back in play. Would need price to break below 105. I'll talk about that in a separate video if and once it happens. If price holds and stays above that, I think these are bouncing spots. All right, but maybe price does not get down there, doesn't reach those levels. What then? Then in that case, the 50 fib is the bouncing spot. And anyone who took longs in there would be doing fine. But how about if someone didn't take longs there? What do I think about that? Well, in that case, I need to see a push above this resistance fractal and long-term moving average at about 106.30. I would need to see a clear 4-hour candle push like this above it. I would like to see 5-6 candles not breaking this low, and I would like to see a bit of a hook back, preferably for a bounce up to the minus 272 target. That's one way of doing it. The other way could be just to keep an eye on the 50-minute chart like this. Look for strong momentum. Look for a bull flag. On an hourly chart, there could be, for instance, a couple of hourly candles like this and a small little hook back like that. Anything that shows that this is not a correction, but rather a base for a further, or just, I should say, a continuation of the potential wave C. Now, if and when it finally starts to move up like this, the target, in my opinion, is the minus 272 target at 107.20, but it could extend up to 107.50 and 107.75. Those, in my opinion, would be bearish bounce spots, bearish reversal spots that could actually be a very interesting swing potential for downside, for long-term downside. Because if this is a downtrend, the start of a downtrend, and this is an ABC correction, this could be the start of a very strong downside. Let's see how far it pushes, but it could start a longer daily or weekly downtrend. Perhaps. At least it could retest this bottom at the very minimum. So anyone who's looking for a swing trade, I think, could be interested in 107.50 short. That is something I'm keeping an eye on for myself. I'm keeping an eye on shorts in this zone. In my opinion, the stop loss, the invalidation stop loss is here above 108.30. Because if it breaks above this stop, then the bearish scenario is out of focus, isn't valid anymore, and we're looking at a different structure. So, from my opinion, the stop loss that is in sync with an invalidation level would have to be above 108.30. That's just my view. So I'm looking for bounces in this zone from a swing perspective, and I'm looking for invalidation level above this top. But until that swing potential happens, I think there could be inter-week or intraday potential to the upside, either from the fibs or as a breakout towards that zone. For more live daily analysis in February, check out EliteCurrency.com. Also, not only for myself, Chris, but also from award winner of the FX Street Award, Nenad Kirkez. You can find that out by signing up here or going to Trading Systems and clicking on Live Daily Analysis. Thanks. Wish you all great trading. Cheers.